everyone. Welcome to Finance News Weekly. I'm your host, bringing you the most important market moves from December 14th through 20th, 2025.
This week, we're covering the Fed's final rate cut of 2025, explosive moves in AI stocks including Nvidia and Oracle, and the market's year-end outlook. We'll also dive into Bitcoin's volatility, gold hitting record highs, and emerging markets stealing the spotlight.
Let's start with the Federal Reserve. On December 10th, the Fed cut its benchmark rate by 25 basis points to a range of 3.50% to 3.75%. This was the third consecutive cut, bringing rates to their lowest level since November 2022. However, the decision wasn't unanimous. 3 members dissented. Governor Stephen Miran wanted a deeper half-point cut, while Presidents Jeffrey Schmid and Ostan Goolsbee preferred holding steady.
The big takeaway? Fed officials are projecting just one more rate cut next year. This signals a much more cautious approach ahead. For investors, this means we're nearing the end of the rate-cutting cycle. Keep an eye on inflation data. That'll be the key driver for 2026 policy decisions.
Speaking of inflation, November CPI data was fantastic news for the bulls. U.S. inflation cooled to just 2.7% year over year. That's the slowest pace since early 2021 and below market expectations. Core CPI came in at 2.6%. This sparked a major rally. The S&P 500 snapped a 4-day slide and jumped about 1% as traders bet on more rate cuts in 2026.
Let's look at overall market performance. The S&P 500 closed at 6834 on December 19th, up 0.88% for the day. For 2025, the index is up roughly 16%, heading toward its third consecutive strong year. The Nasdaq gained 1.31% to 23,307, while the Dow climbed 183 points to 48,134. However, both the S&P and Nasdaq are actually down for December, an unusually weak stretch for what's typically a strong month.
Across the Atlantic, the European Central Bank held rates steady for the 4th consecutive meeting. The main refinancing rate stays at 2.15%, deposit rate at 2.0%. The ECB updated growth forecasts, 1.4% in 2025, 1.2% in 2026, then back to 1.4% in 2027. Inflation is projected to average 2.1% this year, declining to 1.9% next year.
Now, let's dive into the AI stock frenzy. Nvidia shares jumped 3% after Reuters reported the Trump administration launched a review that could greenlight H200 AI chip shipments to China. This could unlock billions in revenue. Nvidia stock is up 32% in 2025, crushing the S&P's 15% return. Truist raised their price target to $275, and Tigris Financial set a strong buy with a $350 target.
Oracle had a wild week. First, the stock surged 6 to 7% to around $190 after news broke that TikTok agreed to form a U.S. joint venture. Oracle and Silver Lake are leading TikTok's $14 billion U.S. divestment. This reinforces Oracle's role as a core AI cloud and data security provider, easing national security concerns around the platform.
But Oracle's earnings paint a different picture. Shares sank 11% after Q2 revenue came in at $16.06 billion versus $16.21 billion expected. The good news? Remaining performance obligations soared 438% to $523 billion. Oracle also raised full-year CapEx guidance from $35 billion to $50 billion. The concern? Blue Owl Capital couldn't agree on financing terms for Oracle's Michigan data center, raising questions about AI infrastructure funding.
Microsoft is going all in on AI.
The company unveiled $23 billion in new investments, $17.5 billion for India over 4 years, and over $5 billion for Canada over 2 years. In Q1 fiscal 2026, Microsoft reported $77.7 billion in revenue, up 18%, with Azure and cloud services revenue rising 40%. However, the stock is down 12% from recent highs on AI spending concerns and Google's Gemini 3 competition.
Apple is approaching the $4 trillion mark. Shares closed at $273.67, with market cap at $4.04 trillion. IDC projects Apple could ship 247 million iPhones in 2025, an all-time record, driven by iPhone 17 demand, especially in China, where Apple led with over 20% market share. Morgan Stanley raised their price target to $315, and Wedbush set a bull case target of $350.
Alphabet is riding high on AI innovation, trading near $297. The stock is up 82% over the past year, with market cap at $3.8 trillion. Google's Gemini 3 AI model launched in November with major improvements in reasoning and multimodal understanding. Google Cloud revenue hit $15.1 billion in Q3, up 33.5%, and the AI infrastructure backlog surged to $155 billion. Guggenheim raised their target to $375.
Tesla had mixed news this week. Shares rallied nearly 5% to $481.37 on December 15th, closing at $481.20. However, a California judge ruled Tesla will face a 30-day license suspension to produce and sell vehicles in the state. Deutsche Bank raised their target to $500, but Morgan Stanley downgraded to equal weight on valuation concerns. Q4 deliveries are projected at 450,000, down from 496,000 last year.
Broadcom investors had a rough day despite beating earnings. Shares fell 11% after Q4 results. EPS came in at $1.95 versus $1.86 expected, and revenue was $18.02 billion versus $17.49 billion. So why the sell-off? Management said increasing sales of custom AI processors with lower margins would reduce gross margins by 100 basis points in Q1. The good news? Broadcom has a $73 billion backlog and announced Anthropic as a major customer.
Adobe crushed Q4 expectations. EPS hit $5.50 versus $5.40 forecast. Revenue came in at $6.19 billion versus $6.11 billion. For the full fiscal year 2025, Adobe posted record revenue of $23.77 billion, up 11%. Total ARR reached $25.2 billion, and the company executed nearly $12 billion in share buybacks. Adobe also announced major integrations with ChatGPT and AI video specialist Runway.
Here's a surprise winner: emerging markets. The MSCI Emerging Markets Index is on track to return nearly 30% in 2025, their best performance since 2017, decisively beating the S&P 500. What's driving this? AI-related gains in China, Korea, and Taiwan, a weaker US dollar thanks to the dovish Fed, and strong commodity demand from resilient global growth. Goldman Sachs forecasts another 16% return in 2026.
Let's talk about a growing concern: AI infrastructure spending. We're seeing a collision between the long-term narrative of exploding AI demand and near-term questions about who pays for it all and when profits will materialize. Oracle's weak outlook and Broadcom's margin warning have renewed these concerns. Oracle's Michigan data center financing fell through when Blue Owl Capital couldn't agree on terms. This is a key risk to watch in 2026.
Over in Japan, the Bank of Japan raised its benchmark rate by 25 basis points to 0.75%, the highest level since 1995. This was a unanimous decision driven by inflation staying above the 2% target for 44 consecutive months. Japanese stocks fell on the news, with the Nikkei down 2.61% for the week. Interestingly, Japan's stock market is still up 24% year-to-date, the highest return globally.
Market flash. December 20th saw the largest options expiration on record, $7.1 trillion in notional exposure. This quad-witchin event included stock options, index futures, index options, and single stock futures all expiring simultaneously. Meanwhile, investors are watching for the Santa Claus rally. Since 1950, the S&P 500 has averaged a 1.3% gain during the last 5 trading days of the year and first 2 of the new year.
Commodities update. Gold is having its strongest year since 1979, surging 65% to around $4,320 per ounce. The rally is driven by Fed rate cut expectations and geopolitical tensions. Goldman Sachs sees gold climbing another 14% to $4,900 by December 2026. Meanwhile, oil is struggling. Brent crude slipped to $59.63 with weak Chinese demand and supply glut weighing on prices.
Bitcoin is in bear market territory, trading around $86,000 to $90,000 after hitting an all-time high of $126,000 in October. That's a roughly 30% drop. However, Bitcoin absorbed more than $732 billion in net new capital this cycle, more than all prior cycles combined. Citigroup's base case targets $143,000 in the next 12 months. Volatility remains the name of the game.
Sector highlights time. Barron's 2025 stock picks delivered 27.9% returns, nearly doubling the S&P's 15.3%. Top performers: Alibaba up 81%, Alphabet up 67.5%, Citigroup up 60%. For 2026, Barron's is betting on rotation into real estate, media, and pharma with high dividend yields. European stocks also rallied, with the Stock 600 up 0.93%, and corporate earnings continue to impress. 97% of companies reported, with earnings up 12.9% versus just 8% expected.
So, what's the big picture? The Fed is nearing the end of its rate-cutting cycle, with just one cut expected in 2026. AI stocks are surging, but face profitability questions. The S&P 500 is up 16% for the year, despite December weakness. Emerging markets are stealing the show with 30% gains. Gold is soaring while oil struggles, and Bitcoin is volatile as ever. For investors, the key is balancing opportunities in AI and tech with rising infrastructure concerns and monitoring global policy shifts.
Looking ahead to next week, keep an eye on year-end portfolio rebalancing, potential Santa Claus rally momentum, and any updates on AI infrastructure financing. With Q4 earnings season starting in early January, now's a good time to review your positions and prepare for what could be another volatile but opportunity-rich quarter. That's Finance News Weekly for December 14th to 20th. Thanks for watching. If you found this helpful, please like, subscribe, and hit the notification bell so you never miss our market updates. Stay informed, stay invested, and we'll see you next time.